Hello guys, glad to have you on board again. Today we're going to cover up the intraday podcast today. First I'm going to make a quick introduction just to tell you one good news regarding the indicators. I finally managed to find a viable solution, so I'm testing it right now since it's not 100% certainty at that stage, but I may have found a solution to share you pro signals. It's the indicator who's basically plotting those arrows, who's basically compiling all the both indicators, the framework and the new version of momentum that should be released today. And I say should for good reasons. I don't want to promise anything I couldn't handle, so I'll try doing it today. But anyway, this one is not going to come to, this week or neither next week. Pro signal is really far from being released or really to be ready, so consider it as an alpha version right now. I may eventually share it to users, but the problem wasn't that. It's that the fact that I knew about the fact that when I will share you this thing, some of you guys will make the dangerous shortcut of using it into automated trading strategy, meaning you're going to set bots to trade the signals, and I don't want you to do this for a single reason. First of all those signals will be triggered by the same output, which means you won't be able to difference to make difference between this signal and this one, even though they are very, very different. This one is a buying opportunity in a trend following scenario, if there is such thing. This one is just barely nothing. All right. So you don't trade the gray signal. You can trade the shaded blue or red only if you see trend trading opportunities. Otherwise, you just wait for the full signals to try trading against the trend or inside a range at the boundaries. All right? But aside from this, if you just try to make automated strategy out of here, you're just going to be ruined. And I just want to make sure that no one will be able to do this. So I just found out an interesting solution. So basically inside signals, pro signals, there will be a password to set, and I'll only give that password to persons who've been using the service for at least 6 months. So I'll be sure that those guys really got the point of those indicators, which is not to make trading easy and to get easy gains without any effort, but most likely reducing the risk, assessing trades opportunity, and taking trades when all those elements are heading in the same direction with a nice risk limitation. So that will be the thing. The difference between the two versions, password and password free, will basically be that those who will set the right password in there will have real-time signals. Those who don't, meaning those who will start using the indicator, will have 2 bars delay to actually plot the output. So that's just a security to make sure that anyway, if somebody tries to cross the line and try to automatize the strategy with without the password, which just basically have 2 bars delay, which is more than enough to fuck up the risk-reward ratios and the gain-losses ratio in an automated strategy. So that's just a security for myself, because I know that some of you guys will cross that line no matter how, no matter what I say, no matter how many times I say you that automated strategies is just bullshit. And suddenly that's going to work, and even less with mine, which is not meant to be coded this way. It never has been meant to be automated, just to use this as alert triggering to prevent over trading. That's all I care about, okay? So all you're going to do, and I stand on this, you won't be able to differentiate all the signals. This is the same output. It's just you can set to be alerted anytime something happens on that market. You can select bullish or bearish, but you cannot select the strength, and that's essential to me, because if I let you that opportunity, I know how you would use that. You would say, okay, good risk management, automated trading, simple trades, simple gains, and that's not how it works. You still have to review the trades, because trades that happens into emotional markets will have to be avoided. Trade that happens into uninteresting prices area will have to be avoided as well. And finally, these are just algorithms. They are here to help you out, to back you in there and make sure you're not taking irrational decision with lots of risk, just making sure that you're limiting the risk when you press the buttons. Certainly not highlighting reversal trends, reversal points. It's just areas in prices where indicators, so algorithms, detect that there is a probability that this could happen, but you have to filter out at the end and to make sure that all the technicals are respected, because an algorithm can make mistake and you don't want to get into a false flag because an algorithm has been detecting something that just makes no sense. All right? So anyway, switching to intraday basis right now, as in the swing trades, there's basically nothing to care about. Just going to review yesterday's Bitcoin trade that I've been giving you right into the Telegram channel. So the market is trying to break one more time. It's another failure, and this time we've got another 15-minute signal. It's not as strong as yesterday's one. Yesterday's one was really good, and I said about that. But we've got still bears trying to fight it out at some point, pushing us back to supports one more time. It's 1, 2, 3, 4 times we're trading that support, but we're still above the previous week's low, suggesting anytime we fuck up a resistance, and I clearly see that this is where the game is at play right now. If the bulls manage to push prices right here, I see a nice breakup to occur, leading us right in here. Obviously, this is not going to be resistance, so I expect the price to go here, going slightly higher, retracing, and pushing to double bottom reverse structure. So this is the way I see the risk at the moment. I still have absolutely no clue about about the fact that this will go ahead or not. All I can tell at this stage is that we have price and momentum. Sine wave is not really an interesting reversal area, but we've already highlighted that area. So if we do this, it's just another double bottom structure. But we need to cross that level first. And I think anytime we make a candle close above that in terms of Bitcoin, so you can set yourself an alert. Anytime we get to send a message there, all right, what the hell? All right, so anytime we manage at bar closes to close above that level, I would say that's kind of a BTC validation at some point of the 15-minute signal. So if we manage to get ourselves out there, that would be a good sign that the market is trying to recover and to maintain that low. I remind you, just for the purpose in here, that we've got two options this week. Either we're going to build a strong low today, and regarding how many touches we've been making on that support, if it ends up holding, you can forecast that we're probably going to make a nice rebouncing week, probably heading back to at least 4,500, which is the double bottom reverse structure, and probably we think we're going to push a little bit higher and probably reintegrate the 4,900, but no more than that. I don't expect us to be there at the end of the week. Going there will be just more than enough, but we have until Sunday to do it, so don't rush things. All we care about right now is to see how long this support will hold, and if it holds. If it doesn't, option number 2 is for us to try making a lower shadow candle, probably going to try to dip a toe below 2,900, which is where we've got most stop losses, below that previous lows. And if the market makers decides us and lead us to go there, I think this is to trigger the stop losses. So I would say if this area isn't working, please, to those who still have a spared amount of money for a final wrecking buying entry, like I do, 25% left, 20% left of capital, free cash available to buy again. Don't buy again until we get ourselves below 2,900. And to those who have already put enough money in there, all they expected to put, I really remind you that whoever goes out of those strategy, putting more money that they expected to put in the first place, will be out of the scenario. So don't, I know you're going to feel it. If we ever go to 2,900, you're going to say, oh gosh, those prices are so interesting. I've been buying 6,600 and it's nearly half prices. So let me tell you something. A plan is a fucking plan. If you put it all you had to put at 6,600, you just don't do nothing at that stage. You watch for prices dropping and you just don't give a shit. Yes, some other persons will probably have bought at better prices than you did, but who gives a shit? What do you trade for? Do you trade to play who's got the bigger dick on the social networks with other assholes who generally are losers? Or do you do this to simply make money? If you want to make money, I think you've been reducing the risk enough buying at 6,600. You're probably going to have a gain out of this price. You just need to be patient. And even if prices drops 50% to give you prices to go to 10,000 or below, or approximately these prices, the day will go there. If you bought there and took the profit out there, it's a fucking gain. Period. That's all we care about, all right? You just need to take a gain and not having taken too much risk for that gain. And I strongly think that we'll eventually go higher than that if this market manages to recover, all right? So trade this, be ready to face that this thing can go to zero as well. So if you're putting more money that you expected to do in the first place, you're just accepting the fact to lose more money if it turns wrong, and it's very well probable as well, as at that stage everything is possible. All right, so I just wanted to remind that just one last time. I'm basically giving you those warnings each and every day just to make sure, even if it's too much to repeat that on a day-to-day basis, I really want to make sure you guys really catch up the importance of what's happening right now, and the fact that if you've done your job, just move the fuck away from here and don't look at those prices. They doesn't matter to you. If you bought it all already, then it's a binary choice to you. Zero in 2 years from now, or you get to a profit-taking area. And in between, nothing to do. All right? And if that means stop watching my videos, stop following the market, just fucking do it. All you care right now is that if you bought it all, move out of the market or go trade something else, but please stop watching Bitcoins. Anyway, now we're going to take care of intraday trades, and I'm going to review a trade I've been taking just a few minutes ago on the German index, right here, right at the bottom. So I've been taking it in 2 times, so we're going to review how it went earlier today. So what I'm trading right now is basically the fact that the market is trying to terminate wave 3, but I see high probability for us to build a target right up here. So I've been buying near that area in here, first buying entry, trying to dip in a toe basically on that support, and I took the 2-minute signal, additional signal, a few minutes ago on an intraday basis. The only signal that was tradable this morning was in, I'm talking pure intraday, was tradable only on the futures market, which means the only viable selling signal was up here. What the market opened at 8 a.m. No, it was 8:30 this morning. So nice selling entry. You got the opposite buying signal in the bottom. So I would say this is where the risk-free trades were this morning on the German index. So it was kind of more of future trading, who's been rejecting, and 9 a.m. has been opening in here and just pushing it lower to the targets right in here. Those who've been selling, been taking the profits. So we're right now kind of oscillating in between, trying to figure out if we have positive or negative US session to expect this afternoon, and we're going to talk about that right after. Switching to SPX, we're going to have a look at the cash market. So right now we're trading approximately at the closing prices, slightly below yesterday's closing prices. So we're trading, trading quite below. SPX is trading 26.65. Okay, so we're trading, we're trading right in here. So close to the resistance prices. We've got very few resistance signal. What the fuck's happening with momentum? Oh, god damn it. So when you have this, it's gonna become more and more often. So you just switch the time frame and go back to the original time frame. It's another freaking limitation from trading. You're really pissing me off with that shit. But anyway, that's how it goes. So when you've got the 100 millisecond loop, you just move yourself to a different time frame, switch back to the original one. It's going to be a common mistake in the next few months for those who will update the indicators. So anyway, The goal in here is to figure out if we're going to break this level or not. We've got strong resistance in here with very strong bearish demand in here. So we'll see if the market managed to get through this. If we do, means that we'll trigger a retracement and probably heading into that area and in a range structure. So you can forecast us to break this level. So that's option number one. Selling again above that channel, so waiting for it to break and probably breaking in here. You can see that breakout area in here to occur. So I would suggest if that's what's about to come, this is probably what most probable path we should take. There, triggering stop losses in here. Okay, just going there, wrecking all the bears in here. This is where we're probably going to catch up really interesting selling prices with a nice bearish signal. Let's hope so. And this is where I want to try eventually selling again. That's option number one. Sorry, no, we're going to go higher than that. Yes, we're flat structure, so we should get next to a point and slightly higher. So you might expect us to fuck up this. Yes, okay, so that would be something like that, probably. Wrecking this, okay, pull backing to find some support in that area and heading to an ABC structure in here. Let me just see what the price structure is. Okay, no, so we should have an impulse kind of wave in here. So 1, 2, 3, 4, 5 is our structure. So this is probably what this will look like. Okay, 1, 2, 3. So bullish impulse, breaking resistances, probably wave 3 may terminate in here. So that's an option, all right? If we made wave 1, 2 in here, wave 3 is going to be probably pushing above all those resistances, fucking the range zone and everything like that. And then adding 4 to 5 to sell the C point is the structure I'll be following, all right? So that will be basically waiting for wave 3 to terminate, place the selling entry alert above, waiting for this to trigger, searching for any bearish signal on top of it is the structure. I mean, in the swing trades, okay, this is the swing trades I'm going to make in the next few days. So just trying to figure out if the market is still bearish and if we still have some room to play the downside, breaking that major support. And that's an option. That's really an option. You need to be aware of that. Option number 2, we break it up and trigger the final bullish wave. All right, so today is going to be a tough session to trade, to be really straightforward with you guys in here. I have absolutely no viable signal. I'm going to see if the futures market is giving us more informations. 15-minute time frame first. Okay, well, no, not that big. So as you can see, the futures market has been trying to fuck up that resistance, hasn't been working well at that stage. So we'll see if we'll have another attempt to play, or yes, and the market apparently decides to fuck up. So I'll say normally I think I'm wrong in my German trade. It should be breaking down, I guess, at this stage, and it probably is. Yes, it is. So I think I'm out. I'm waiting for this market to retrace deeply, at least deeper, and we'll see how it goes. We've got multiple supports on the road. So we'll see how it goes. If this is trending, we should find some support in that area. Okay, if we're 1, 2, 3, 4, 5, which means if we're still having bullish bias on that market, then we should see this. I'm not going to trigger stop losses at that stage. Doesn't seem like a viable breakdown. As you can see, we're now triggering a bullish signal eventually on the 2-minute short time frame futures contract. I would say this morning is tricky because it's hard to figure out. We've got multiple signals in multiple assets, both the cash and the futures. So I would suggest you eventually try with both this morning if you're trading the Euro area session. I would say looking at both those charts and trying to figure out signals into interesting prices, or yeah, both in a cash market perspective and the futures market, because both of them is going to give you pretty different signals. In here we're already trading at a Fibonacci retracement. In here we're basically trading non-interesting area. In here we had an interesting area which seemed to be not interesting in the futures contract. So it's kind of a big mess that's happening right here. So I would say, okay, don't know how to handle this in such perspective, so really trade cautious. And don't be over trading in here. So I would say really being patient. Sounds like a range. So if you're triggering stop losses too early, you're just going to take a stupid loss for no reason. So I'm not going to cut this trade for that reason. I still think the market is trying to range in here. So I'll see how it goes. If we cannot find support in here, I'll eventually trigger stop losses. But at that stage, doesn't sound like an option to me. All right, got no more than that to say. So big game today is really crossing the resistance or not on the SPX. It's hard to tell. Yesterday was a positive session, so normally we try at least once to test the resistance again. So if you have a look at this in a daily chart perspective, yesterday is really opening at the lows, closing at the highs. So generally we try at least breaking it up. As we saw, the futures market has been testing this already. It's been passing through but not holding candle closes. We'll see if the cash market manages to do this today or not. But all I would say is that it's kind of a weakened support that we have in here, a weakened resistance as we already broke it with the futures market. Doesn't mean the cash market will manage its way up there, but if it does, I see very low probability to have strong resistance. So probably we'll try breaking through this. All right, but we have to test that level, and for now we're not. We're kind of rejecting this and heading back to support area instead of facing the resistances. So we'll see how it goes, but it sounds more like a positive journey today. At least trying to go high, not necessarily doing it well, but I'd say at least I think the cash market will try to retest what the future market has been doing. All right, bye guys. That's all I had to say. So I'm going to push the updates later today if I have time. Depends on how volatile the US session is. I need to remind you that to me trading is absolutely coming first. Releasing the indicator is going to be done only if I have time to do so, and I hope I'll be able to do it today. See you tomorrow for an educational session.